You really thought the market was going to crash on the FOMC meeting? Come on, it's just going to be much more like a blow off top. Send the QQQ to 600 already, get it over with. In all seriousness, we are in strong daily uptrends across the board, S&P and NASDAQ. We have risk on sentiment across the board. And Microsoft and Meta earnings, they just smashed the upper bound of the market maker expected moves in the after hours. It's undoubtedly bullish out there, but please do not be the sucker chasing highs with no stop. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description and stay tuned until the end of today's show. I've got 2 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a quick look at the SPY daily time frame chart. What do we see here from a trend perspective? Well, clearly, this is the highest high in the trend count. This is a mild pullback from the highest high, and it's very possible that from here to here, we finally have the next daily higher low in the trend sequence because we did fall into an hourly downtrend here. We'll talk much more about that in just a moment. But is this a great location for the higher low? To me, the answer is absolutely. We've basically seen that Monday's high of last week is now acting as support. This key level is at 631.50, and as long as we're above that, I would maintain a bullish stance on the market. Even if the daily chart were to pull back a little bit deeper into the top end of this balance range from here at 626.65, I would still qualify that as a daily higher low opportunity relative to this previous low back over here and coming from the highest high in the trend count. In terms of the candle structure, I love the lower wick, which would indicate buyers stepped up clearly, but I am slightly cautious of the upper wick here towards the top end of what I would consider a 4-day balance range from here. Thursday, Friday of last week, Monday, Tuesday of this week. Now, of course, you can see that the daily bar did technically close underneath the balance range lows here at 634.65. However, based on earnings from Microsoft and Meta, in the after hours, we are trading 638.60 by 67, which puts us basically at the all-time high. So there's not much of a threat of using this as overhead supply, and instead, I would continue to look for upside here out of this market. I think we can get more granular on the hourly chart and walk through why this is the case. If bears were really going to make a stand, they would have wanted to use all of this as trapped overhead supply. The easiest way to think through this is to put yourself in the shoes of anybody who bought the market up here in this balance range. If you're a buyer in the range and suddenly you're under the range, of course, buyers are going to feel like this. But the fact that the market is slated to open, at least as of right now, at about 6:32 Eastern time, the market's going to open over today's high on a very small gap up. Inside the balance range, those buyers will not be feeling disappointed. Those buyers instead will be feeling probably emboldened. The fact that sellers could not break down underneath the Monday high of last week, the fact that sellers could not keep a lower high underneath the overhead supply at 634.65 is likely to embolden buyers, and instead, the more likely case that I would be watching for on tomorrow morning's open is really something that looks like this. Any consolidation over the top end of the FOMC euphoric high, which is in here at 636.75, any consolidation that looks like this, I would look to be a buyer at 636.75 and ultimately Brigade bolt this over the all-time high for a move into the overnight all-time high, which is a weak reference point that was set on the Monday morning open. Was it Monday morning or the overnight here Tuesday morning? We'll take a look on the futures chart in just a second. But anyways, in the Spiders Cash ETF, that's 640.25. The overnight high should not act as the all-time high end of the auction. So that would, in theory, need some degree of repair. So to summarize, I would prefer to be a long here off of 636.75, targeting the true all-time high regular trading hours at 638.65. I would prefer to be long here on a Brigade bolt over the all-time high, targeting this. So your 2 risk-reward boxes probably look something along these lines for your first trade, and then something along these lines for the second trade. Anything beyond that is blue sky territories, and I would really just start thinking about the upper edge of the weekly expected move here at 646.09. The one thing we can throw in as a little bit of confluence near this overnight all-time high level is the bull flag measured move when we zoom out, and probably it makes more sense actually to do this on the daily chart. Let's do it here. Let's break out the Fibonacci extensions coming from the low of the bull flag to the top, then to the pullback low in here. You can see that the measured move is ever so slightly over the upper edge of the weekly, not weekly, but rather overnight all-time high. The blue cyan crayons are confusing me. We've got 641.60. So let's not split hairs here. Generally, this area is going to act as your target if we get this upside Brigade bolt out of the current all-time high from the regular trading hours. The next thing we can do here is take a quick look at the Fibonacci retracement. How deep was the pullback relative to this last low here? And what you'll see is that we did maintain a higher low over the Fib 61.8, which is always the line in the sand. The next thing I would call out is that the Fib 38.2 typically denotes bull flag consolidation. So if this was going to be bull flag consolidation, the FOMC breakdown technically jeopardizes that. But once again, with the after hours intent of a gap up, it's like this, I don't want to say like it didn't happen, because it of course did happen, but suddenly the sellers who got overly aggressive towards the lows, they're the ones who are actually feeling trapped here. Anybody who shorted this FOMC breakdown thinking, aha, this is it, the market's going to crash and burn and go to zero, they're the ones waking up in a world of hurt tomorrow morning if this gap up can sustain, and especially if it can sustain over 636.75 for, once again, this sort of look in the upward direction here to the measured move, so on and so forth. The next thing we could throw on, and this actually might be interesting, I have not considered this yet, is if we come in here on a measured move, and let's not use the FOMC pullback low, let's use the low of this consolidation. What does that give us? Pretty darn close, yeah. Right there towards the upper edge of the weekly expected move, closer to about 646, 647 as your next upside target. This does make sense when it comes to market geometry if you're into that type of thing. How about our intraday anchored VWAPs? Anything here? Let's take a look. You'll notice that this is the exact anchored VWAP off of the last bottom that caused this move here. So the origin of the reversal acting as support there. We've recovered over this anchored VWAP, which of course is the anchored VWAP from the first pullback after breaking the balance range. So that's this. Remember, we're opening on an anticipated gap up. And even as of right now, with the anticipated gap up, we are opening over the weekly start, the Monday anchored VWAP as well. So long as price is over 636.75, I do not think it makes a whole lot of sense to be a bear in this market. So then, Matt, where does it make sense to really flip the bias to becoming a little bit more short-sided, a little bit more on the bearish side of the equation? Well, if we do come in for a test of the overnight all-time high, promptly reject and do something that looks like this, I would think that it might be worth a stab at this kind of short setup here. I wouldn't overstay my welcome, though. You can clearly see that shorts have not been rewarded at all in these current market conditions, so I would treat this as a very quick scalp, maybe from point A to maybe point B, and only if the market internals are blood red, which we have not really seen during any of the sell-side activity over any of these failed gap ups, right? And I guess another thing to just point out here is that on the Tuesday session, if we are getting granular with the analysis, the Fed kind of overshadows this, but with the granular analysis here, Tuesday should have yielded a gap fill reversal into blue sky territories. Let's continue the bullish uptrend. Well, that didn't happen, and obviously you got consolidation here, and that's where all morning the consolidation was spent here. So I will say that buyers have not really been indicating momentum longs into this blue sky territory segment, but again, the flip side of the coin is you have to still give the buyers the benefit of the doubt because the daily trend is up. Look at how far we are over the daily 20. You could read into that both ways. You could say it's bullish, but you could also say maybe it's overextended. My personal take is just that the market is in a bullish environment right now. The risk-on sentiment is all firing. We'll see that through the supporting evidence charts, and therefore maintaining the stance of this as the primary base case here and here, then Brigade bolts over that for the upper edge of the weekly expected move. That's the primary situation. If the market just rips right through it, fine. Something that looks like this is also feasible, risk and reward to get there, and then ballooning runners into blue sky territories, right? The time where it would also become a little bit more open-minded to the short side is if the market does open here, fade off, not hold 634.65, and instead use that as resistance. There was actually a very short instance of time. If we look at the 5, we might even need something smaller. Let's try something smaller, a 1-minute chart. There we go there. Yeah, you can see right around in here. See how the market balanced just a hair above that? If we were to break down underneath, I think you unlock another component or another wave, perhaps is another way to think of it. You unlock that sell side pressure once again. You can see buyers tried to step up there. That's likely where I think buyers kind of throw in the towel to some degree in terms of a magnitude of disappointment. Not huge magnitude, but little tiny magnitude of disappointment, okay? So underneath 634.65, I would probably look for the equal low, but even that is not really all that compelling of a short side story, I think, because of what we've talked about already on the daily timescale. Hypothetically, you could have seen a move all the way into about this 626.65 and still offered a daily higher low. There's no issue with that staying over the top end of the balance range break from over here. So let's get a little bit more granular. Let's take a look through our supporting evidence. This is not what we want. We want the internals, please. So on the internals setup, if you're not familiar with this, by the way, check out the video tutorial in the top right-hand corner. You could see that on today's session, there were decent volume outflows. Those are going to be wiped out as we open up here inside of those, gap up high territory, basically right at all-time high territory. It's going to get wiped out. And a lot of this only came in from the Fed. It's not like as we were balancing here in the morning session, we had substantial volume outflows. You can see it was actually quite muted and near the zero line. If you look at the advanced decline line, same thing happening here. The index score was actually quite mixed for the session, and the same thing here out of the tick with a small cumulative build in the upward direction before ultimately, leading to its demise on FOMC when the market did see a little bit of that volatility. But once again, I think what I would illustrate here is as the market gapped up on Tuesday, and Tuesday was really the more aggressive sell side day in the morning session. Monday was a little bit more of just a downside grind. So Tuesday's aggressive, it was a bearish engulfer, no doubt about it. What did we have at the exchange level? And I know that the Fed is kind of overshadowing this stuff right now, but I think it's important in terms of understanding what types of participants are at the market or in the market trading in the exchange. I mean, is this bearish on Tuesday when we had a bearish engulfing bar? We opened on a gap up and closed underneath Monday's low? No, absolutely not. At the exchange level, it's not really supporting the idea that new money sellers are stepping up, at least on the NYSE side of the exchange. We will see a slight discrepancy when we jump on over to the NASDAQ in just a moment. Here's the market profile. If you're not familiar with this type of charting software, check out the video tutorial in the top right-hand corner. What do we know? Does the value end up shifting lower with price? Do sellers really commit down here towards the lows? Absolutely not. Look at value area. Value area is right here. Point of control actually made a move in the upward direction, if you could believe it or not, in the upward direction on the ES relative to the Tuesday breakdown. And I think this really highlights the engulfing bar from Tuesday. Here is your Monday range. Look at how value is overlapping to down. Point of control is underneath Monday's low. Where is it today? Back inside of that Tuesday range. So in my view, sellers did not have anything to lean on here. You could even see that we have a very subtle double distribution. K period single prints right here determine the double distribution. So your upper distribution is here, your lower distribution is obviously underneath. The more time the market spends in the upper distribution, which is where I would imagine it does because of the way that value is distributed up here, the more bullish the market is. It's just telling us that sellers who are trapped down below in the second distribution to the downside underneath the K period single prints, so on the ES futures that's like 6,400 and below, these sellers are trapped. Anyone who committed sell-side volume down here is trapped, absolutely. You get a little bit of a K-period excess high, which is worth talking about. We're going to open on a gap up above that. That's not a traditional spike because it doesn't happen into the market close. I would just really maintain the idea that as long as the market pulls back, supports over the previous day's high, I would even just go as far as saying, hypothetically, point of control, if you're over that, then buyers are still being rewarded for taking risk at the all-time high, and sellers are the ones who are getting burnt here. The last thing I'll point out is very, very nuanced, but it is something worth talking about. Remember that the whole premise of downside action would have been if this spike base from over here was taken out. It was taken out, and again, did value really develop underneath the base of that spike to indicate that we have trapped overhead supply? The answer is no. Okay, this is something that we carried forward all the way from previous week session. It's sellers don't have it going on. Sellers absolutely do not have it going on. We've actually done a number of, this actually repairs this poor low. This is weak and mechanical, noting that Tuesday's lows go right to it. So that getting taken out actually repairs this structure, and repair structure, or repaired past tense structure, does indicate healthy continuation in the upward direction, right? It no longer means we have deficiency on this low. So I think the biggest thing to carry forward is just the fact that the overnight high is the all-time high. That is weak. That is structurally deficient. Let's see if we can go clean that up in the regular trading hour session tomorrow morning. So gap fill reversal is the name of the game, right? Gap fill reversal will be the name of the game on the Spiders Cash ETF, ES futures, the whole 9 yards. If we're over this key area, just like I talked about on the hourly chart, there's really no issues. That's going to be 630, 675. If we open here, pull back, gap fill reversal, Brigade bolts, long side, okay? That's the primary base case. Let's jump on over to the nasty NASDAQ. Let's take a look at the QQQ Cash ETF. Let's see what's going on over here. Let's see what we're working with on the daily. Strong uptrend, absolutely. This is possibly a higher low. We did flip into that hourly downtrend. Once again, you'll see this on the hourly chart, lower highs and lower lows. And the close here is back inside of the Tuesday range. We did not close any candles underneath the Monday high of the previous week. We're still over the upward sloping daily 20. We're over the breakout level from in here. There's really no issues with the QQQ daily. If anything, this doji hammer-esque style bar would just indicate that breaking out over its high should unlock a continuation move into blue sky territories. One difference between the NASDAQ and the S&P is that we do not have the deficient overnight all-time high that needs repair. This is a proper regular trading hours, all-time high in the NASDAQ. So please just carry that forward. I don't even want to be short, and I've said this basically until I'm blue in the face on the pre-market live streams, but I don't even want to be short if the market were to break underneath that Monday high 566. I don't want to be short through this range. I really don't want to be short into this range. The daily chart would have to build a compelling story for a big time trend reversal, maybe a lower high and then a lower low, something like this. Let's just break out the crayons and call it maybe a head and shoulders. If that happens, then fine. In the future, I will change my tone to being slightly more bearish, but we just don't have that yet. And therefore, if the market does this, perhaps we just have to let it go. Whatever happens in this box happens, but I do not love the prospect of looking for shorts inside of that range. And you can see it here on the hourly chart, really well defined also. Look at this structure underneath us. Who got cooked, right? As the kids would say, cooked, 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 cooked. All the shorts got cooked every single time, right? And in all honesty, let's put the slang aside for a second. You're building a nice structural base here. Think about this in terms of commitment from buyers and sellers. Are committed buyers down here feeling happy? Absolutely. Are they happy that they have this block ahead of them? Of course. Anybody who's long from down here and pulls back into here might honestly think about adding to the position, not selling the position, right? So as long as this structure remains intact, I really don't see any issues with that. Again, put yourself in the shoes of a seller into this afternoon session. If you think about what the sellers would have ideally wanted to see, it's these multi-day lows then acting as resistance for something that does this. Did that take place? The answer is no. Look at the gap up here. We're talking about 574, let's call it for round numbers sake. It's a blue sky breakout gap up, right? So pullbacks that look like this, A-OK, pullbacks that look like this over the previous all-time high from Tuesday look okay. The name of the game is buying a higher low pullback, right? That is the name of the game. If the market just rips and rallies straight out of the gates, say we gap up here and we just rally, yeah, I would be slightly cautious of chasing it at the expected move high. But if we can get some sort of first 5-minute, 2-minute higher low pullback over an upward sloping VWAP on the session, maybe if we can pull off intraday scalps for risk reward 2-to-1, monitoring for blue sky breakout continuation, sure thing, right? Sure thing. We are in a totally bullish environment right now. It looks like earnings are going well on Microsoft and Meta. We will have commentary on that, and I just want to maybe give that to you while we're talking about the NASDAQ. Microsoft and Meta have massive gap ups right now. You need to be watching both of those if you're trading the NASDAQ tomorrow. If Microsoft and Meta start to fade the gaps and move lower, then of course, what do you think the NASDAQ's going to do? It's probably going to do the same. It's going to follow suit and possibly try to pick up buyers on the gap fill reversal here, 569.75. If Microsoft and Meta go gap and go, they're holding over the pre-market highs, they're holding over, pre-market pullback lows, anything that looks like that, you're probably dealing with a much more confident situation in the Qs to buy the first pullback over VWAP looking for continuation, and that's your stop, right? So in the intro, I said don't be the sucker chasing it at highs with no stop. You would have to combine the fact that Microsoft and Meta are both holding over pre-market highs, a VWAP entry on the Qs or the NQ futures, whatever your instrument of choice is, and then we look for that upside follow-through. If Microsoft and Meta are pulling back, then hold tight for a second. Probably wouldn't short it for the gap close. That's not really where the money's made, at least in an uptrending market like what we have right now. And instead, the money is made on the gap fill reversal, trading back in the upward direction to be in confluence with the daily trend. So that's really it. That's the name of the game here on the QQQ. Big gap up, gap fill reversal, or hold of the previous all-time high, 572.15. Gap up, gap fill reversal here, and then Brigade bolt over the previous all-time high. Also a very reasonable path that I would look for in the upward direction. If we go ahead and take out let's go intraday anchored VWAPs. See what's going on with that. You're getting an open, obviously, on the gap up above it all. I think it would just reinforce the idea, even if you do fall into the previous day's range, if you're falling into this junk, it's not a short. It's absolutely not a short. You're going to be setting a new higher high immediately via the gap up, so that keeps the hourly trend in the upward direction. If this is ultimately going to yield like a higher high double top, you would have to be underneath the neckline. So say we gap up to here. This is the only time I would maybe flip to bearish, but again, bearish for what? Why do I want to be bearish through this range back here? The only prospect would just be, okay, this is a big failure pattern. Now we have an hourly downtrend. Maybe that's enough to be bearish, but the market internals would need to be screaming red. Blood red if we're even thinking about, or if I'll speak for myself, if I'm even thinking about shorting this through this range back over here. We'll quickly come in with a Fibonacci just for the sake of being congruent in the analysis. Looks like we held up over the 61.8. We're gapping up obviously over the 38.2. You could loosely say the 38.2 was this level, and the fact that the daily close was back above is bullish. If we come in here with a measured move, let's go back to the daily. The bull flag on the daily is not as clear. Let's just, oops, this is the wrong tool. I realized that as we change time frames, we need to change tools. Let's come in from here to here, pull back low. What do we have? Sort of already home at that pullback target. This is just an upward trending channel. There's not really a bull flag in here to measure the move from. I mean, we were probably already home on this one anyways. Let's just see what we get there. Yeah, mostly home via the gap up on tomorrow morning's open. So I would not use that as a measured move either. So really, it's just horizontal levels that we've already mapped out. It's gap fill reversals. It's being mindful of if we do see a gap and go, please, if you're trading the NASDAQ, if you're an NQ futures trader and you're like, all I watch is the NQ on a 2-minute chart, that's it. I don't look at anything else. Just do yourself the favor tomorrow. Watch Microsoft, watch Meta. It's M squared basically. If they're fading the gaps, you know what to do in the NASDAQ. If they're not fading the gaps, you also know what to do. You can buy that first 5-minute, 2-minute high or low over an upward sloping VWAP if we're over the overnight high. Okay, that's the QQQ. If we take a look at the NASDAQ side of the market internals, what do we see over here? Certainly a little bit different, and I would read into this just a bit. Remember that on the Tuesday session for the NYSE side, we did not have volume outflows that were substantial. We did here on the NASDAQ. We did have a substantial volume, advanced decline line, as did we a cumulative build to the downside more impressively as well. Now, once again, obviously Meta and Microsoft earnings are just overshadowing this. The Fed is overshadowing this, but I do think it's worth at least calling out what's the takeaway here. It would just mean that stronger sellers possibly were getting active inside of this afternoon consolidation on Tuesday. And if anything, this overnight gap up via what's happening on Microsoft and Meta, like we said on the hourly chart on the Qs, who's going to get cooked here? The sellers are the ones who are going to get steamrolled. So, fire up a little James Taylor. I'm a steamroller, baby. I'm coming for you. The sellers are done. As long as there's a gap fill reversal, as long as there's a higher low over the top end of this, there's really no issue out of the NQ, out of the QQQ. I wouldn't maybe disregard this, but it's FOMC. It's FOMC. Aside from that, earlier in the session, it was much more of a bulls on parade style indication out of the market internals. Okay, so I think the sellers are the ones who are going to get hurt tomorrow so long as we can yield an hourly high or low. The only time I would even consider shorting the NASDAQ is if we're underneath this Monday high at 566 with the conditions we've already talked about. It would have to be a massive failure pattern. I don't even love it in here because of this. If you are looking for shorts, it's really all about the S&P 500 failure pattern, testing, repairing, coming back in. Maybe there's this. It is not my favorite. I think I've been very clear. It's not my favorite. If we have to trade it, maybe, but more likely than not, I'll probably just look for alternate opportunities across the core list of companies. One quick look at the NQ market profile just to see if there's any discrepancies here. The answer is no. We have a great excess low in L period, K period, excess high here. You can see that the value area is overlapping to slightly up on the NQ on today's session. The point of control mildly higher as well. Once again, no indication that stronger sellers were getting active down here. You can see that these excess lows are still in play. Everything is all proper in terms of the downside auction ending properly. Let's take a look back over at the charts here, and let's take a look at the IWM for the small caps, which were probably brutalized the most, and they're not going to get any benefit basically of the Meta and Microsoft earnings here. So with that, you're in a balance range on the IWM daily. I wish I had something strong and compelling to tell you, but there isn't anything. You kind of have highs, higher highs, lower highs, lows, lower lows, higher lows, lower lows. Is there a daily trend here? The answer is no. I would take this one day at a time and just say when and if we break the range low at 217.50, we'll be bearish. When and if we break the range high at 225.50, we'll be bullish until either of those things happen. I don't think it's worth speculating on small caps in the midpoint of this balance. You know what they say, do not exchange in the range, don't enter in the center. Do not, maybe you've got kids listening, so we'll use the PG version, do not fiddle in the middle. All right, why would I not change my tone to being aggressively bearish yet? Really because of the weekly chart, and we keep referencing this in multiple analysis videos that we've put out, but generally, this head and shoulders, the neckline which caused the tariff breakdown, or did the tariffs cause the neckline breakdown? Does the dog wag the tail? Does the wag dog the tail? You get the idea. I know I mixed it up. If we get this hold over that level, then I really don't see a reason to be a big, bold, aggressive bear, and instead, it seems more like price digestion up here than anything else. We all know that small caps are very sensitive to economic policy, and with what Jerome Powell has just done, by being slightly more hawkish, it's not really much of a shock to see that we are, lower and a little bit weaker than what we have in the S&P and the NASDAQ. So daily, we'll keep it simple there. Hourly, I think, all the more reason to keep it simple. Here's your balance range. Perhaps a lower high under 222 keeps the sellers in control. That might give us a little bit of a headwind in the S&P 500 in the after hours. You can see we're not nearly catching any of that sympathy from what we got out of Microsoft and Meta. So I do think it's in play that a rejection here keeps a bit of that pressure on, specifically from the small cap side and its impact in the S&P. Remember, the S&P is typically caught in the middle of smalls and the NASDAQ because of the way that tech is weighted right now, because, Microsoft, Meta are still top dogs in the S&P 500, and we just saw the intent of a gap up anyways. I would not over-index on the idea that small cap lack of performance or lack of participation is going to be a detrimental blow to the market. It's just not the case. Let's take a look at intraday anchored VWAPs here to be congruent. We'll do some Fibonacci work, and then we'll move along. If we take a look, we're underneath the majority of the stack, which is different, obviously, than what we have in the S&P and the NASDAQ. So 222 rejections, 20 SMA rejections, anchored VWAP cluster rejections. It all kind of makes sense that the bears have a bit more edge here in small caps. Your downside level, though, from the weekly is this 217.50, daily 200 SMA, daily 50 SMA. It's another one of these things where, just like the NASDAQ, I'm hard-pressed to be a big bear there. I don't think that the narrative is overly indicative of a large short here for the small cap side of things. Let's quickly do some fib work, see where we landed relative to the acceleration and now the pullback. Over the 61.8, if we come in from that low, if we come in from the bottom of the balance to the top of the balance, let's just do this. Also underneath the fib 61.8, 38.2. Under that also, generally just like the midpoint of the range, if this is resistant, it wouldn't be unreasonable to target the bottom end, right? From a simple range trading perspective, short the highs, long the lows. So therefore, if we do reject and get here, what might the first thought be? Well, what if we can support there, and that then turns into a tailwind for the S&P? Maybe we start to put the pieces of the puzzle together. The S&P closes the gap, the NASDAQ closes the gap, the small caps come into the bottom end of the range, small caps start to bounce, gap fill reversal is looking pretty darn attractive over in the S&P and the NASDAQ. So for that reason, you might want to watch out for this zone down here, 217.50. Let's jump into our Russell side of the internals. We'll keep this thing moving along. Generally, same concepts as everything else. Outflows, bearish, and a little bit more bearish here into the FOMC. But aside from that, really a mild week with Tuesday, bullish build ahead of the FOMC. Same thing here. Tuesday, a little bit lackluster on the cumulative build from the tick. If we check out our market profile for the Rusty, where did we land in terms of value area? Value area was lower. Again, not a shock here considering the relative weakness and the impact of the Fed. The point of control was lower. Much larger string of single prints in K period. I would just watch out again, just like we talked about in the S&P and the NASDAQ. Really, I think we spent more time on it in the S&P. But if we're accepting in the lower distribution, that would just be a bearish signal. If this is trapped overhead supply, then guess what? We probably rotate to the bottom end of the range, right? So use that double distribution to your advantage here. Use those single prints if you want the exact levels in the RTY futures. Come out to the pre-market show tomorrow morning, but rough figures right now, 2246.30 and up here 2259.50. Okay, that is your RTY futures look. That is, same thing as the IWM. You would basically just use this 223.25, and then down here, it would come into 221.66. Okay, that is the small caps. Let's give this a reset. Let's rip through the sectors. Weekly performance is first up on the docket. What do we see here in terms of who was leading, who was losing, and where was the weight? Why are we loading? Semiconductors, come on. We have, in terms of weekly performance, leading the pack, semiconductors up 2.24%. We have the TLT bond, long bond, actually leading second up there at 1.02%. Interesting, that's risk off. Utilities beating out technology. Interesting again. This is slightly more D for defensive. It's certainly lightweight. This is certainly D for defensive as well. But the fact that semiconductors are leading, tech is right there, wouldn't be overly concerned. We've been dealing with a pullback anyways. I'd be very interested in the daily performance from the opening print. So not this weekly performance, but the daily column right here for tomorrow's session. If the market gaps and goes into blue sky territories, we need to make sure it's led by the tech sector, the discretionary sector, semiconductors, as well as perhaps communications due to Meta. If that's not the case, if utilities are leading the market higher, Meta, Microsoft, all that stuff pulls back, that would be a massive red flag in terms of relative performance and posture in the market. The bottom end of the barrel, it's the XLB, the lightest weight sector, no issues there. Industrials, healthcare, D for defensive anyways. It would be great if financials could play catch up, but as we'll see on the structural chart, really no red flags as of right now. Let's check in on these things. and see what's going on here. You can see I had an alert at 291.45 just in case the inverted hammer low broke. That was not the case for today's session, and as of right now, looking A-okay. The one thing I will caveat here is, yeah, we've talked about Microsoft earnings, we've talked about Meta earnings, but we also had ARM earnings, and we also had Qualcomm earnings. QCOM. We'll take a look at these charts momentarily. And we had Lam Research, which I believe is LRCX in terms of its ticker in case you're interested in following along, or LCRX. It's one or the other. And these names are actually lower on earnings. So let's just do this quickly. Let's go side by each and let's take a look at ARM and let's throw on the extended hours session. What do we want? We want this here. You can see ARM is substantially lower. That'll act as a small headwind for the SMH. Qualcomm is substantially lower, breaking down here. And then LRCX, Lam Research, there it is, LRCX. Let's take a look, also substantially lower. Now, your NVIDIAs of the world are not moving in sympathy. They're moving in sympathy to, of course, Meta, who I didn't listen to the conference call, but I have to imagine they're mirroring what was announced from, who was it just the other day? Google. They're increasing CapEx, I'm sure, on AI build-out, infrastructure build-out. Probably the same thing from Microsoft. So M squared, Microsoft and Meta, probably announcing CapEx expenditure, or CapEx is expenditure. A little redundant there, Matt. But you get the idea. It's causing NVIDIA to move higher on the premise that, hey, we're probably going to be ordering some new chips from you guys. What about TSM, just to stay on the semiconductor theme? Not much happening there. And then the other one, AMD, we'll look at this also. A nice little pop in the upward direction. AMD has had massive relative strength over the last couple of really weeks. Let's turn that off. Let's get back to our split screen here by going full screen on the daily. We'll get back to our sector watch. So SMH, it looks fine. The premise of what I'm telling you is that NVIDIA moving higher is going to compensate for ARM, Qualcomm, and Lam Research earnings. And instead, I would maintain an optimistic stance as long as we're over the previous all-time high shelf at 293.15. Long-winded way of saying that the SMH is still continuing to act as a bullish and risk-on indication for the broad market. TLT, a little bit of an uptick here. Not surprised, considering that Jerome Powell is maybe keeping rates paused for a little bit longer than the market was expecting. A little hawkish. We'll talk about that commentary as we move through. Utilities, small uptick here, moving to the all-time high but backing off. Once again, we know what the red flag would be if utilities are leading the pack and semiconductors, tech, and communications discretionary are lagging. That would be your red flag tomorrow. It's TBD. We have to monitor the performance from the open tomorrow. Technology sector looks great. Nice little hammer candle here over the previous highs. Looks bullish over today's high, probably seeking upside continuation. Obviously, the gap up here is already 268, just hardly north of the all-time high. So gap fill reversal or straight up continuation. Bulls on parade here for the XLK. Energy looks fine. It's just consolidating in this range. Not much to talk about there. Materials, not much to talk about here. Maybe the golden arches pattern, the good old double top, starts to set in underneath 89. We'll see if that becomes the case. Obviously, they did not like what was going on with rates here. XHB probably looks similar. Yes. So as long as we're over $100, 50 cents, let's set an alert on this. On XHB at or below. If we crack this, I might be a little bit more concerned. You could argue daily double top. That's not the point. For me, the point is more of the weekly double bottom is starting to fail. So $100.50 is critical there, and that does have a lot to do with interest rates. We'll talk TNX in just a moment. Let's move into industrials. Gap fill reversal is the next watch, daily 20. Over today's high, looking for upside. You could trade your industrial names if you'd like, but for me, just a bullish boon for the S&P. If we look at the XLV, which is healthcare, of course, UNH continuing to smack this thing around. Don't touch the healthcare sector. I don't know why anyone's trading this. Is there, unless you're selling iron condors up here and down here, corn dogs, as we joked in the morning show, there's nothing to do. There's really nothing to do here. Excuse me. Let's go UNH just as an example. This is a toxic asset. I would not touch this with a 10-foot pole. If it's going to be the discount and deal of the century, why are people not rushing and flooding in here to buy this thing? Wait for a daily trend reversal. Can we get a higher low back over here? If not, then I just wouldn't touch it. Too much overhead supply. Anybody who bought the dip the first time around who's like, oh my God, why is it not working out? They're going to sell for break even possibly at this 293. I don't like it. The healthcare sector is garbage right now. Stick with what's hot. It's obviously semiconductors and tech. Financials, also another hot one. Look at this. Daily 20 hold, possibility for a higher low. It looks bullish. Consolidation here. Brigade bolts over 53.30. Rock and roll. We're bullish for the S&P. XLY also looks good. Possibility for, again, the golden arches. There's your double top. If we crack this neckline, yeah, I'd be interested in the pullback to here. Might offer a little bit of a headwind for the S&P, but for now, bullish consolidation until proven otherwise. Let's not front run the idea that it needs to get here. It does not need to get there. Look at the lower wick from today's session off the daily 20. If we're over 221.75, bullish consolidation, and as a matter of fact, probably bull flag breaking out over 227 unlocks 234. Next next reasonable range to be trading for in the upward direction. And even this is a weekly high or low still. The only trouble would be if this ends up turning into, which let's not jump the gun, right? We'll deal with it when and if it shows up. Maybe head and shoulders. We're just not even close to talking about it yet. I know we just talked about it. XLRE, real estate, lower on rates. Not a shock here. Is it doing anything detrimental? No. Let's move along. Communications, again, maybe a little bit of golden arches pattern happening in here. We'll watch out for it. Daily bar is not as compelling, but with Meta earnings, I mean, what are we doing here? Why are we thinking bearish in something that's got a nice gap that's brewing through the overnight on one of the heaviest weight constituents? I would be thinking more about balance in here than anything else. If it rallies and rejects and then maybe sets up a little bit more meaningfully the head and shoulders, fine. Under the neckline, we'll look for that reversal. But for now, with the gap ups, I would be more bullish on this than anything else. Let's take a look at staples. Nothing to talk about over here. It is also a dying breed. Like the XLV, I would just steer clear. Let's move into our ratio charts. What's going on here? Lo and behold, tech sector is the glue that's holding it all together. I would prefer outperformance from the XLF. We're not doing it yet. XLC, let's see if that gets in gear tomorrow on the gap up. XLY, really not doing anything here. So I would say that this X is like, hey, let's get in gear. I'm asking something of you. It's not actually performance right now. The XLK is the glue that holds it all together. We do not have risk off. We do not have risk off. If we take a look at some specialized ratios now, you can see we're batting 6 for 6 in uptrends right across the board. So when I say risk on as sentiment in the introduction there, this is exactly what I mean. If we take a look at the risk on off AB set, so this is B, this is bullish, right? Gold is not outperforming. Metals are not, nobody's rushing into metals right now. If you look at Bitcoin, it still has a bullish sailor shift on the weekly. If we take it on down to the daily chart, you can see that we're just balancing, digesting the breakout here. I would still be optimistic even if we pull back into 112, 275. No issues with that. If we take a look at the TLT ratio to the S&P, small little tiny uptick, but is it in an overall uptrend? The answer is absolutely not. That's bullish for risk appetite in equities. If we move into our dollar and interest rates, the dollar has been improving here, which is interesting, no pun intended, considering that interest rates are hardly changed. The hawkish tone from Jerome Powell probably helped a little bit today, but we do know that the dollar has recently had a little bit more of a negative correlation with equities. I think that what could be very interesting is if the dollar makes an overnight move to open near this 101, which is a very historic level if you go out to a weekly chart here. Look at this. If we reject 101, right, and the earnings gaps sort of, take care of the, negative divergence as we've called out, basically, then guess what? Dollar moving lower off of 101 probably helps equity prices move in the upward direction and interest rates remain unchanged. That's probably a bullish story for the S&P. Right? So as long as the dollar gets crushed, and, not that I want the dollar to get crushed. I don't want the dollar to go to zero. Goodness. We don't want to, see the reserve currency of the world get devalued. But from a risk management perspective, or a risk, what would you say? From a trading / market mechanics perspective, dollar weakens, your assets are bound to inflate. Right? That's kind of the way it's been working here over the last little bit. So watching the dollar 101 rejections would be the next big key here. Interest rates unchanged. Of course, let's drop this into the Fed tracker tool, or the inverted ZT, which is the Fed tracker tool. Basically, I would indicate that this is unchanged after Powell's commentary today. Typically, when the market, or I should say when the Fed is going to cut rates in the next meeting, they serve it up on a silver platter. They say, hey, yeah, maybe we're thinking about it, and the labor market could use a little bit of a reprieve, and inflation's doing fine. So I think we're going to focus on the labor side of the dual mandate and ensure that we don't do unnecessary damage there. The Fed could say things like that, but they did not. They did not talk about that at all today. And instead they said, labor's doing fine. Inflation's probably running still a little bit too hot, although we're getting pretty close to the 2% target. We feel like policy is kind of right where it needs to be. We're flexible if we need to bend and flow, ebb and flow. Could be either way, right? Which is kind of crazy. Jerome Powell certainly it seemed like a threat. He was almost like, hey, you're kind of lucky we're not raising rates in this meeting, which I know I'm going to get some flack in the comments, and we have all the people, show me your economics degree. I'd love to see it. But honestly, with goods inflation starting to see an uptick, services inflation seeing a little bit of a downtick, the tools work best on goods inflation and higher rates. Not that I'm saying we should get higher rates, but the extended pause here is not unreasonable considering what's going on with the CPI and PPI prints that we got earlier on in July, of course. So those are my 2 cents. I'm sure that's maybe going to ruffle some feathers, but let's take a look at what's actually going on with the Fed tracker tool, the Fed watch tool. You can see the market's about 55% odds of a pause again in the next meeting. And then here is not a pause. This is a cut Current odds are, let's go to current. Yeah, there we go. Current is 425 to 450, and this is telling us here that we should be expecting, my apologies. I guess these odds must have just updated after the close. I was thinking that this was here, in which case we were saying, okay, there's about 55%, 53.5% odds of a cut. No, because sustained pause. So here is your 1 and 2 cuts into the end of the year. Interesting. So obviously there's no August meeting. So we have a little bit of a time period here where we're going to get some experimental watches basically as to whether or not the Fed fund futures are pricing in the pause or the cut. 50-50 odds. This is what I mean by Fed Chair Powell being a little bit more hawkish today and sort of saying, no, labor market is doing A-okay. We're sort of seeing supply and demand both come down at the same time. So we're not experiencing a labor shock. He's talking about the top line number on unemployment rate on Friday will be important to watch out for. I don't know if he has the leaked numbers or not. The chefs out back did a good job of cooking it up, I'm sure. But everything pointed to a Fed that was probably a bit more hawkish than the market was anticipating, which is why I would imagine it sold off there into the afternoon. But, is that enough to really cause the markets to move aggressively lower? No, I think that we're still in an uptrend. And honestly, if you want my full thoughts, or I guess maybe just the blanket statement on the fundamentals, I think that pausing on rates is kind of fine. Again, I know that is going to ruffle some feathers and everybody's like, oh, we want lower mortgages. I get it. Mortgages, not really accessible right now at 7%, basically. Small businesses getting choked. I get it. But inflation for everybody is just going to make the entire situation worse. And you're kind of seeing that subtle goods inflation come in a little bit. I don't know. Like I said, I don't want to ruffle too many feathers, but I think that as of right now, this is kind of fine. That's subjective. That is my take on inflation, Fed policy, and everything that's going on with Powell. It's not so much an objective take. It's informed by the objective take, which is just that inflation is running a little hot, hotter than the Fed's 2% target, and the labor market's not a concern right now. So anyways, what is going on with the statement tracker? Not much. Growth moderated in the first half of the year. We got the GDP prints this morning. They seem to be just fine. That's another way to frame it too. Let's just jump over here. JOLTS is not like collapsing and falling out of the sky. We know that if we look at the week-over-week jobless claims, I know that this is not this Thursday's number, but look at this, just straight in the downward direction. So does the Fed need to panic and cut rates to save the labor market? No, absolutely not. If we look at the PCE, yeah, we'll look at PCE. No, we really want the CPI, year over year, just so I can back my argument of saying like inflation print is not where it needs to be. There you go. CPI year over year, 2.7, right? That is not the Fed's target of 2%. Now, I know that the CPI is not the Fed's preferred gauge. I know it's PCE. You don't have to lecture me on that. All I'm saying is that inflation has not really come down to 2% flat. And I think that cutting rates aggressively, maybe 25 basis points is fine, but cutting rates aggressively is just going to be fuel on the fire to send this right back in the upward direction. You want to bring it really full circle, and I'm just sort of defending my subjective take, which I think is fairly informed by, once again, the objective analysis. You slam rates down, make mortgages affordable. What do you think is going to happen to housing prices? They're just going to go through the roof. So sure, you might get a lower rate, but you're going to pay a much higher multiple on the house anyway. So who knows? Roast me in the comments section. That's fine. What else is going on here? ADP non-farm came in better than the expectation. More fuel for Powell to say, nope, we're not moving rates. We, of course, have the full Monty on the Friday session, 8:30. Coffee and donuts on me up in the office. It's the rate, it's the unemployment change, the true NFP, and the hourly earnings. Are we in a wage price spiral for now? The answer is no. Manufacturing PMI is less of a thing than I think what will be happening on services PMI. We are a service-based economy, of course. That's Tuesday, August 5th. Not this week, next week, okay? That is really kind of it. The embed tracker here, I know we glanced over it briefly, but all I would point out is that there were two people, it was Waller as well as Bowman, right, looking to decrease the Fed fund rate by about a quarter percentage point, 25 basis points at this meeting. So you do have some dissent, and the majority here voted for no change, okay? So you are getting the Fed that's leaning a little bit more towards the dovish side of the equation. That's two folks, rather than saying, like, you could have said increase instead of lower. It could have been increase. That would have been much more hawkish, right? In that case, Jerome Powell looks like a hero. In this case, he kind of looks like a jerk, at least in the eyes of the administration, although I personally feel he is, again, subjective take here, is doing pretty much what he should be doing. If anything, with the meme mania and all the madness going on, I hate to say it, but like a rate hike, the threat of that there, the little hawkish stance he took, I'm sort of like, I'm on board with that from Powell. I also like the mic drop at the end of the press conference. You can go watch the clip, I'm sure, somewhere, but someone asked, like, what do you think about everything going on with the administration and you? He basically slammed the binder shut, said, nope, no comment, walked off the stage. Right on, Powell. Not bending the knee to any of that stuff. So you can love him, you can hate him. I think that he's in a tough spot between a rock and a hard place, and is doing a pretty good job navigating the soft landing, so to speak, as of right now. Metaverse, Microsoft, Robinhood, all earnings. We know that. Lam Research, Qualcomm, ARM, we looked at already. Don't forget about Amazon and Apple, of course, after the close on Thursday. MicroStrategy, which is now just Strategy. Coinbase, Reddit are your honorable mentions as well Thursday after the close. Nothing really important here before the open on Friday. So with that, let's jump back over to the platform. Let's finish up today's analysis with a look through our bond ratios. No change over here. Look at this, creeping lower. As a matter of fact, that's bullish for rates to come down. So, if this was breaking out, we'd say, okay, long end of the curve is pricing in some kind of inflation. Just not the case here. If we take in a look at credit spreads, you can see they're moving lower, moving lower. This is bullish for risk appetite in equities. If we look at the HYG and LQD, not really breaking to new highs. I'd be curious to see how this performs tomorrow on the gap up from equities in the after hours. Not that this really trades much in the after hours. The liquidities are basically non-existent. You're dealing with 80.33 and 80.51 there. So unchanged from this ultimately. And even in the corporate grade side of things, you're just at an equal high. I'd be curious to see if this gaps up tomorrow morning. All right, so for now, it's not really a red flag, but I would want to make sure it starts participating. Otherwise, it will become a red flag. If we look at total breadth, a little bit of a downtick today. I'd be curious to see how this plays tomorrow, noting that, of course, the pullback did step in towards the close, regular trading hours as a pullback. Not shocking to see this. Tomorrow morning, is it continuing to move in the downward direction? If you want the true takeaway here, obviously Microsoft Meta, M squared as we've called it, they're going to be contributing a majority of the gains to the S&P. If breadth actually flips negative here, and I'm not saying it has to on these moving average charts, I'm not saying that the new highs versus lows needs to go negative, but if it does, and M squared is keeping the sort of weighted broad market higher, that would be a small, not red flag, I'd call it a white flag, to just say, all right, let's be a little cautious of the all-time high and chasing it up there with no stop. We look at total breadth. Let's look at the RSP. This would easily be an indication as well. Just notice that the RSP had a deeper pullback, and where does this gap up to tomorrow, if at all, helps with that same narrative. If you're trying to figure out what's going on here, no gap up, no new all-time high in the RSP, that would be your small white flag. Basically just telling us that Microsoft Meta, M squared, is accounting for all of the gain in the S&P, and nothing else is really playing nice. Okay, let's move into QQQE. Same story here. I would just watch to see if we do get an all-time high gap up on the equal weight NASDAQ. Let's not rehash that too much. Volatility collapsed here after the Fed. No surprise there. You're going to see the same thing on the VVIX. So let's skip into our vol futures, which we got a little sneak peek of on the internals dashboard. Contango, nice little move to fade the highs out of the one-day VIX, and with earnings in the rearview mirror, I would expect this to collapse on tomorrow's session, just indicating that everybody's content from a money management perspective. Nobody's like shivering in their boots saying, oh my goodness, markets are going to collapse, burn, and go to zero. Let's take a look through the core list of companies, and let's see what's going on here. NVIDIA, as we saw through the after hours, is gapping up, likely on some CapEx announcement from Microsoft and Meta. Generally, this is bullish over the all-time highs. Keep it simple. Two-day high here at 179.60. Brigade Bolt, higher low. Basically gap fill reversal, which indicates a higher time frame Brigade Bolt, here's your higher low, right, is the name of the game for blue sky breakouts. Keep it simple. No need to overcomplicate this NVIDIA chart. You can clearly see it. Maybe you want to call it a cup and handle, whatever you want to call it. Gap up here, pull back, support a higher low, continuation. If we just rally, Brigade Bolt higher lows intraday over an upward sloping VWAP, blue sky territories are on tap. If we look at Microsoft, let's flip on the extended hour session here. Excuse me. There we go. Upper edge of the market maker expected move on earnings was here at 530.50, right? This is just such a blatant miss on the market maker expected move that I would think you have the opportunity for dynamic hedging tomorrow. If this pulls back and cannot get back to this quote home base here, market makers will be off sides. So what does that mean? If they're going to be technically, they've sold the majority of the calls in here. That's what market makers do. If they're short calls, they're technically negative delta. To offset that, they have to buy delta, which means they're just going to go out and buy 100 shares for every contract they sold short. So to neutralize, I would possibly look for a bit of a gamma squeeze tomorrow morning on Microsoft. If this pullback, once again, cannot get to 530.50, this is a massive blue sky breakout. Really, honestly, forget about even trading this tomorrow. Real pleased about what's going on in the long-term account. The other thing to just point out is that the gap is going to be so substantial in size. Yes, use the overnight high, but also just manage expectations. If this goes flat because everybody's battling for price action, I don't think you're going to get much of a move. Remember, the 4 different cohorts of buyers and sellers. We haven't had to talk about this in a while. Let's do it quickly. New money buyers, NMB. New money buyers cause upward pressure. New money sellers cause downward pressure. Old money sellers cause upward pressure as they're closing out of shorts. Old money buyers cause downward pressure as they are closing out of longs. Right? So these are your 4 different cohorts. All of them might think that there's something to do tomorrow. What's the net effect of this? Nothing, right? You go sideways. New money buyers want to be long. New money sellers are like, oh, look at this. We have to fade it. It's going to go to 0, right? Old money sellers are like, wow, we're getting blown out on the short side. We've got to close this. We've got to buy to cover the position. Old money buyers are like, hey, let's take some profit up here. Okay, so the net effect of all that might just be sideways. So manage the expectation here. It will be a top watch just based on the gap, but don't think that you have to be a superhero and pull off the trade of a lifetime on Microsoft just because of the gap up, okay? Let's talk about Apple. It's really not much to talk about. The daily chart sucks here. That's it. We've said it. It's inside this consolidation range. Failure now twice. Maybe a little bit of double top action. Earnings on Thursday after the close. Praying for the sake of Timmy Apple over there that it either gaps up big time or gaps down big time. Either way, the chart might indicate something to do, but if it's in this box, I'm just totally uninterested in Apple. Amazon earnings on Thursday after the close. So far, I like the structure here, holding for a previous resistance area acting as support, but within earnings, anything goes. Looks like it's getting some sympathy here in the upward direction, even ahead of earnings. I'm actually curious to see, did Apple have anything? No. Amazon building out AI infrastructure, I'm sure, becomes a part of the equation here, which is why it's moving. Microsoft, Meta probably both announcing that in the conference calls. Regardless, Amazon on a gap up tomorrow morning probably gives us something to watch for the broad market help, but not enough to actually trade with options on earnings same day. So I'm just going to steer clear. Generally, those are the levels if you're interested, but let's keep moving. Google, on the other hand, I like it. I like Google's setup in here, noting that on the hourly chart, you're unchanged. Let's turn off those extended hours for a second. There we go. This consolidation builds out a nice building block in the upward direction, and the next idea here is just, can we get the Brigade bolt for the gap close overhead? 198.203 becomes the next watch. Here it is on the daily. Look back here. There's your gap. This is an earnings cycle gap down. If we can move over 198, once again, Brigade bolt here, 203 becomes the target. I like the uptrend that we're in. I like the breakout from this. I like everything about it. I like that this is a higher low. I would prefer if Google had a little bit more intraday momentum, but for now, that will be a watch. 198 Brigade bolts over the high of this failed gap up. Okay, when I say failed gap up, I just mean it faded. Okay. Metaverse earnings, obviously, and let's go to the hourly chart, extended hours turned on real quick just to take a look. Let's see, obviously also blasting the upper edge of the market maker expected move. That is in green here at 734.67. So same commentary as the Microsoft chart. There's not much to say outside of what we've already said, and you just use different levels, right? So 734.67. If market makers can't get prices back down there, expect a little bit of a gamma squeeze. If we hold up over 741, that would be bullish as well for a possible higher low over the previous all-time high pivot from back here. So you're gapping up to like here, basically. 775 up here. This is the name of the game. Pull back longs over that. If it just rips into the blue sky territories, then we've got to manage risk up against the VWAP. That's really all we can do. The other way to manage risk here, which probably not talked about often enough on the channel or just often enough anywhere on social media, but you can just manage your risk based on the total position size, especially with options, right? If you only want to risk $500, go find an options contract that's worth $5 and go buy it, right? And that's your position size. If it works, great. If it doesn't work out, then max risk is $5 if you're just net long one call contract at $5, right? So use that to your advantage as well. If you're trying to keep risk in check, you don't have to slam this thing with like 100 contracts or whatever, trying to be a hero and trying to navigate a stop. Just lower your position size. Total dollars at risk is your position, right? Let's talk about Tesla. Really not much going on here that's of interest. Until it breaks the range, when I say range, I'm talking about this. Tough, real tough. Spaghetti moving averages, not really anything going on there. So I'm just being patient on Tesla. There's a lot of like not good setups outside of, like I was saying when we were talking about healthcare. Why bother with UNH? Why bother with a majority of these tech companies as well? It's like if you're not trading NVIDIA, if you're not trading Palantir, AMD, and Robinhood, what are you trading out there? right? Nothing else has been moving like these 4 or 5 names I just mentioned have been. So Tesla, it's kind of on the back burner for now. I do like the daily hammer off of the 314. If it wants to get in gear, break the trend line, that's fine. But until it actually does it, until it can clarify something, I don't love it. I don't love it in this range. Just look at this. It's sloppy. I hate it. JP Morgan is a good reminder for our financial sector. Looks great up here. Bull flag consolidation into blue sky territories. Let's rock and roll. Let's talk about Palantir. Another inside candle today. I love the setup. It's still a top watch. It is mildly higher through the pre-market session, but it's not making a new all-time high, which I like. If we open in range and the broad market's bullish, I would love to see this trade here. Brigade bolts into blue sky territories. Here it is. Let's turn off the extended hours for a moment. Let's take a look. So there we go. Look at this little inside candle. If we consolidate here, which is kind of where we're opening, right? Look at that, 159.70s, right around in here. If we can get that open, consolidate over 158.50, it's very clear. Brigade bolt over the all-time high, blue sky territories, right? Earnings are a non-issue. They're next week. So into the end of the week, I would probably trade the Friday expiration. I'm typically a fan of going out a week, but I will go with the Friday expiration to avoid this and the implied volatility pump there. Okay, that's Palantir 160.15 into blue sky territories. Love it. If we just consolidate in the range, I'll let it be. I don't love the prospect of trying longs at 155 now that we have a multi-day range. It is technically an area of support. If we bounce off of it, that's fine. But if we test it, I would start to get a little cautious of committing longs there. I would think a pullback could come in, especially if the broad market fades the gap up tomorrow. Okay, Palantir, primary idea here. Let's continue along. Broadcom, another one with great relative strength. Looks like it's opening not really on a big gap up, 302 by 302.14s. So right around in here towards those highs. If we look at the daily chart, nice, not really an inside candle, incremental higher high, but no breakdown of the inverted hammer low. It's breaking out of this range. You have hit a range double, so you're at the measured move target there. Blue sky territory is up and over 302.50. I think keep it simple is the name of the game. Honestly, I would prefer the NVIDIA chart before I would trade Broadcom. I have a love-hate relationship with the options chain here. If you look at AMD, this is another one I would opt for to trade instead of Broadcom. This is also moving slightly higher through the pre-market as we saw 183 on the forecast open somewhere up here. If we pull back, gap fill reversal over 180.35, you could see it on the hourly chart clear as day. Over that level, 180.35, here's the forecast open. Pull back, gap fill reversal, longs back up to what? 186.75. With respect, of course, to the Tuesday high there. But that's the primary idea. Risk, reward in that zone right about there. Let's move into Robinhood. Another one with earnings. I didn't spend as much time with Robinhood because I was more interested in the hyperscalers. But for now, it's looking like, even if you want to consider Meta hyperscaler these days, what do we have on Robinhood? Unchanged and unfazed, not even close to the upper edge of the market maker expected move or the lower edge for that matter. If you take a look at the daily chart, that means we're going to be in here. You've got your 107, very, very clean watch here. I would put an alert on this, so let's do it together. Let's go 107. What is the number? 77 is way too high. Let's go 107.10. If we crack 107.10, I'd love to know. I would love to trade for this in the upward direction. If we're just consolidating in range, I wouldn't touch it. If we do test the daily 20, be careful. It's a lower high breakdown here. I wouldn't short it, but I definitely would not be long the daily 20. I would just let this area go after the possibility of this lower high happening here. That's Robinhood. That is the core list of companies. Let's get into these two additional ideas. MicroStrategy is the first one. What's going on with MicroStrategy? Check out this inside candle here, inside inverted hammer rejecting the daily 50. If we crack the lows, I'm looking for a quick scalp into 383. Here it is on the hourly. Let's turn off those extended hours. Let's see what's happening here. Look at this rollover on FOMC, right? So kind of interesting there. If we can crack this low, I think if we look left, there we go. There's pretty thin structure into this little support point before this rally. So once again, the idea here is a quick scalp underneath 391.50 into 383. If this is going to sort of sweep and then come back above, I might be cautious of the inverted head and shoulders and just play it off as, okay, maybe into either the end of this week or early next. If we're back over 404.75, maybe there's a long on it. But for now, with Bitcoin also stuck in consolidation, I would tend to think that this is an okay idea under the 391.50 into 383. If Bitcoin rips overnight, obviously the trade idea will be off the table, but for now, that's the watch. Okay, 391.50 breakdowns, 383 target. MicroStrategy done. Next up, Oracle. Oracle, after hours 256.10 by 70, that is into blue sky territories. Okay, so you're opening up here. If this can pull back and support this level, I would be looking for the gap fill reversal. That is a blue sky breakout gap fill reversal, all-time highs. the whole 9 yards. You got lows, you got higher lows, higher lows, higher lows. If we could support it, I would be looking for it at 250.50. Okay, that's Oracle as the final trade idea. That's all I've got for you in today's episode of the Midweek Market Update. A lot of talking today, pre-market prep, Jerome Powell, live analysis, the full analysis here in the Midweek Market Update. If you enjoyed the video, if you appreciate the effort, anything, I guess, let me know down below in the comments section, or just give the video a very simple thumbs up. I know it's kind of annoying that, us YouTube people ask for that all the time, but it does go a long way in terms of showing some support for the channel. Certainly lets me know that, I'm not wasting my time here talking into the air. I could just, do this with the group and call it good, but hey, we do that every day anyways. If you want that every day, you could join the live squawk, this type of analysis, everyday market close, live analysis from 9:30 to 12 o'clock. Check it out. You know where all the stuff is. Enjoy the trading week. Enjoy the rest of it. We have another round of Apple and Amazon earnings. Don't lose sight of that. Don't get overly aggressive on the short side. Doesn't make sense. We're in strong daily uptrend. Supporting evidence is all still bullish. That's really the bottom line of the video. That's a check-in on all the data points. You have a couple of trade ideas, and I'll send you on your way. Have a green trading week. As always, I will see you in the next one.